Good, everybody, it's Marco from Digital Dash. We're going to be doing a trade recap on how I made $210 today trading gold. This is the first time we traded gold this year. And I don't even know if we traded gold last year, but this is pretty much what we came to the charts and we saw this morning. So right off the bat, gold is in a pretty strong uptrend. The 4 hour looked good, the 1 hour looked good. We're recently breaking above structure. All we're looking for is to hold above this structure and for the trend to continue. And that was it. We lacked clarity on ES. So that's the reason why we came over to see what gold was looking like. ES looked like it wanted to move up. It looked like it could sell off. I wasn't 100% sure, and that didn't justify us putting on full risk, let alone any risk, onto ES when gold looks so much better. Right, so seeing this strong uptrend move up was really nice to see on gold, and at that point it just left us looking for how are we going to get involved on price moving higher. Right, we had highs here that we can break if this is a valid uptrend, and we should have no problem running highs, and then lower highs here if we can get a valid entry to get involved in a move up. We could target here, then we could target here. Right, so we got to draw to the upside. Came to the charts and I saw this. This was the first setup that I missed. Saw this low here on a 30-minute. Saw this low get ran, failed to move lower. That's telling me that sellers are trapped, and we could possibly. That's a reason for buyers to get involved in the market and for a price to move up against those sellers that are trapped, right? We're using them as fuel. And then if we get a 30-minute setup that plays out a break above here, we can see a retest into this level for the 30-minute to not play out this long setup, a valid long setup. So this is the sign, that's the first signal that sellers are trapped. And then a break and retest above this level is confirmation that the 30-minute buy setup is playing out. So that's pretty much what we saw. I came to the screen. I saw this. I saw that trap going ahead a couple bars. Those lows were still protected. This was the first trade that I didn't take. You got to push above that swing. Retest into that level. Boom. That trade would have been in there. And then just targeting 1-to-1. Got it easily, right? And things started picking up afterwards. So I missed this trade. This was the trade that I missed. But we stayed patient because we understood that now that 30-minute, there's a strong break above that 30-minute swing. A retest into this area could offer us an opportunity to get involved with that trade. So that's what we're waiting for. We marked off this level to see if we could come back down to this level, understanding that 30-minute would need a retest. And this is when something very nice happened. We ended up getting a strong 5-minute sell setup. Now this gives me conviction because now that tells me that there's liquidity resting above these highs. There's sellers who are enticed into the market, right? Strong bearish move down. And there's a valid 5-minute sell setup here that's going to put people's stop losses above here, right? So if I were to take that setup just based off of seeing the setup print without any context of trend, without any context of direction, then I would have taken this would be a valid entry for me, and I'm gonna show y'all. Right, so keep that in mind. People are looking to sell this, right? People who are just chasing this breakout, chasing this breakdown, they're not paying attention to the overall context, the overall trend. They're looking to sell that. So that's the reason why I'm using this as logic that stop losses and orders are resting here. This is giving me the draw to the upside. This is further confirmation that price may want to go up, right? So keep that in mind. And we're gonna get my actual trade. All right, now my actual trade is based off of this candle, right? Again, before I delete this, shorts are now triggered into the market. They're getting a retest into this level. They're looking to see price come back into this level and then continue lower with their stop losses above. So now I'm gonna delete that and we're gonna put the trade that we took on. We got in at 46.099. We had our stop loss below. Target those highs for 21 points. Because I targeted that for 21, I ended up widening my stop loss. And once we got that break, I set my limit. I only went at one contract. I set my limit there and waited for us to get retested into that trade. And on the next candle, we got entered onto the trade. Now, I want y'all to also notice this previous trade, this same level, this same retest level, what happened? Price came right back into it again, right? So even if we would have had a limit order sitting here from this previous trade, price tapped right back into it and went, right? Look how precise these levels are based on the ways we trade here. Look, that same swing, the last buying before the down move, boom, came right back to it, no drawdown, right back to that level. But that doesn't matter anymore. All right, so now we're triggering into the trade. Same thing. Here was the last buying before the last down move, the last buying before the last down move, right? Right back above that buying, got in, triggered into the trade, targeting those highs, understanding that shorts are now, even more shorts are initiated into the trade right here. Even more shorts chase that last down candle into our entry. And now all we're doing is riding our buy against their sell, targeting their stop losses here. Let the trade play out. Saw a little bit of drawdown, no sweat. Started to move in our favor. Saw a little bit of drawdown again, no sweat. Price moved. It was moving kind of slow. Moved kind of slow. Had our target up here. Our stop loss down here. Slowly started to move in our favor. Took a little bit of time. And then eventually, oh, it played with us there in the live recording. We can see it played with us. Chill, chill, chill. Chill, chill. Chill, chill, chill. Bro, chill. Yo, chill. Wick down here lower too. Took a lot of profit back. It put us at like $100 worth of profit. It went down to like 98 until eventually we got out for a win here. All right, guys, here we go. 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 For real this time, chat. Here we go. Here we go. This time. For real, chat. For real this time. Here we go. Targeted. And then after that, I believe it went higher. Yeah, wherever we are. Went a little bit higher. And then started selling off for the day. And now this is the real-time action right here. So again, very interesting, because it shows that this was a valid sell setup, right? This was a valid signal for a sell setup. But ignoring the context of what's happening, ignoring the context of the trend, that's how it gets tricky. Because if you're trading supply and demand, it looks like valid. If you're trading a supply zone, say this pushed up into a supply zone, we took it, it looks like it's gonna work, and then it doesn't work. There has to be a loser on the other end of your winning trade. There has to be a winner on the other end of your losing trade. So taking my strategy and reverse engineering it to see if I would have taken the sell, how would I lose and why would I lose? I now use that to my advantage to win against my own strategy. I'm understanding there's a market structure shift. There's selling entering the market. There's people chasing those selling. There's people entering that selling. Again, that's the trade that I would have took. That's the complete opposite of the buy that I took. It's the same thing, but in sell. I just so happen to be on the right side of the trend. I just so happen to have stacked my confluence to say, okay, it's more likely that price is going to move in this direction than the other direction, right? And I did that by saying, okay, there's seller's trap here. We're looking at the overall trend. We're seeing that the 30-minute is playing out its own buy, right? As we retested this and came back into this area to retest the levels that we previously already identified. All of that was helping put us on the right side of the trade. Instead of seeing this short and chasing that, we used that information and understanding where those orders would be to our advantage. So quick trade, $210. Interesting. My stop loss really should have been here, 15-point stop loss. And then I targeted those highs, but again, I didn't want to skew my data by starting to take bigger RR trades. So did something a little unorthodox, stretching out the stop loss a little bit just to keep it 1-to-1, just in case this did want to go 1-to-1, and then come back, use the stop losses here as liquidity before moving on, right? Because that happens. Just like we can identify that there's orders here, taking this trade will make orders there. right? And I'm only, it's not 100%, but I'm using my logic of my strategy and my logic of my system against myself to protect myself. You feel me? So that's all we did today, man. Clean move on gold. The only other thing we did that we really liked was identifying that ES didn't look good for us to offer risk, to put risk on for it, and then we moved where it looked better at. You feel me? We went to gold, and gold helped us achieve what we wanted to achieve, and it did it in a clean manner. So that's what we did. $210 a day. I'll catch you on the next video. Thanks for watching.